Imagine a stock that once traded above $70, then crashed all the way down near $2. Most investors walked away. Most people called it finished. But what if I told you this exact collapse might be the reason? Some investors are watching it again, because sometimes the biggest opportunities appear right after the biggest crashes. Today we are talking about Plug Power stock. And the big question investors are asking right now is simple. Can Plug Power recover by 2030? Or is this company heading toward complete failure? Stay with me until the end of this video, because the final reason we discuss might completely change how you see the stock, and it might surprise you. But before we start, if you enjoy stock market analysis and investment insights, make sure to subscribe and turn on notifications so you don't miss future videos. Also remember, this video is for educational purposes only and not financial advice. Now let's begin. Plug Power is one of the most well-known companies in the hydrogen energy sector. The company builds hydrogen fuel cell systems used in logistics, transportation, and clean energy applications. Major companies like Amazon and Walmart have previously worked with Plug Power for hydrogen-powered warehouse equipment. The big idea behind the company is simple. Replace traditional fossil fuel systems with hydrogen-powered alternatives. If hydrogen adoption grows worldwide, Plug Power could benefit massively. But here's where the story becomes complicated. Plug Power stock used to trade above $70 during the clean energy boom. Back then, investors believed hydrogen would explode as the next energy revolution. But reality turned out to be more complicated. The company faced several problems. Revenue growth slowed, losses increased, and investor sentiment changed. As a result, the stock collapsed dramatically. Today, Plug Power trades around just a few dollars per share, which raises the biggest question investors are asking right now. Is this a hidden opportunity or a value trap? Right now, Plug Power trades roughly around the low single-digit dollar range. The company's market cap is only a few billion dollars. Compared to its peak valuation during the clean energy hype, this is a massive drop. Some investors see this and think the opportunity is gone, but others see something different. They see a company with global hydrogen ambitions, trading at a fraction of its former value. And that brings us to the next key factor. Why do some investors still believe in Plug Power? There are three main reasons. First is the global push toward clean energy. Governments around the world are investing billions into hydrogen infrastructure. Second is the potential expansion of hydrogen-powered transportation and industrial systems. If hydrogen adoption grows significantly, companies like Plug Power could benefit. Third is valuation, because the stock has fallen so much. Even moderate growth could move the price significantly. But before investors get too excited, there is also a serious risk side. Plug Power still faces major challenges. The company continues to report losses. Hydrogen infrastructure development is slower than many investors expected, and competition in the clean energy sector is increasing. Some analysts worry the company may need additional funding to continue expansion, which could dilute shareholders. So while the upside could be large, the risk is also real. And that's why Plug Power remains one of the most controversial stocks in the clean energy sector. Now let's talk about the question many investors care about. Where could Plug Power stock go between 2026 and 2030? There are three possible scenarios. The bearish scenario. If hydrogen adoption slows and losses continue, the stock could remain stuck at low levels. The moderate scenario. If the company stabilizes revenue and improves margins, the stock could gradually recover over several years. And the bullish scenario. If hydrogen infrastructure expands globally and Plug Power becomes a key supplier, the stock could experience a strong recovery. But here's the twist most investors overlook. Plug Power does not actually need to return to $70 to generate large returns, because the stock price is already so low. Even a move from $2 to $6 would represent a triple, and a move from $2 to $10 would represent a 5 times return. This is why some investors continue to watch the stock closely, not because it will necessarily return to its old highs, but because the risk-reward profile can become interesting at very low prices. Plug Power is not a safe stock. It is not a guaranteed winner, but it is one of the most interesting companies in the hydrogen energy space. Its future will depend on three key factors: hydrogen adoption, financial stability, and the company's ability to scale its technology globally. If those things happen, the recovery story could be real, If they don't, the stock could struggle for years. And that is exactly why investors remain divided. Now I want to hear your opinion. Do you think Plug Power can recover by 2030? Or do you think the hydrogen hype is over? Comment below and share your thoughts. And if you enjoyed this deep dive into Plug Power stock, don't forget to like the video, subscribe to the channel, and turn on notifications for more stock market analysis. Because the next big investment opportunity could be closer than most investors realize.